IVM.
Folks, welcome and thank you for joining us on this episode of the Ideas Project, a limited series by Smallcase. I'm your host Anupam Gupta, and today we are joined by Shubhankar Dongre, the co-founder of Zapkey. Zapkey is a platform that's organizing the resales homes market in India and is doing so by building a strong foundation of trust and transparency. If you aren't looking to sell or buy a resale home in one of Zapkey's markets, the website also offers convenient access to home registration data for consumers to make the most informed decisions when it comes to buying, selling, or renting a home. Previously, Shubhankar also co-founded PropStack, a B2B real estate data company focusing on the commercial logistics and mortgages sub-asset classes. Long story short, all this and more makes Shubhankar the perfect person to talk to today about the housing sector in India. Why are property prices constantly rising? What's the current state of residential versus corporate real estate? What should investors keep in mind when thinking of investing in this space? Stay tuned till after this break to find out more.
Namaste, this is Cyrus Brocha. I am part of the government cancel culture program to remove rubbish off all the different streams available. So what we have is all the collected rubbish we put together on our show. It's called Cyrus Says. It's on IVM podcast. You have to watch it and listen to it. It's on our app. It's on our website. It's on the YouTube channel. It's on Facebook. There are many different ways. Don't bother me and ask me how. You have to find out. We talk to different personalities. Many of them are known. Some are just people we meet downstairs and invite them up for chai. But the point is, it's fun and it's very therapeutic. So please join in and listen to Cyrus Says.
And welcome back. Shubhankar, welcome to the show. Thank you so much for doing this for our listeners.
It's a pleasure to be here, Anupam.
Right, let's start on an explosive note. Okay. Just last Sunday, we have we've got you at this time where there was a major real estate related incident that took place in Noida, the demolition of Supertech Twin Towers, and it was broadcast everywhere. So what do you think about this whole affair? And, you have an opinion, I'm sure. And how will this affect the real estate rates in Noida?
Straight to the Sansani case, I see. So, look, I mean, this is an exhibit A. It's a classic case of construction risk. It's one of the few risks that potential buyers run when selecting a home to buy. You either buy a fully constructed home or you buy a under construction home. Now, why do investors or buyers choose to buy an under construction home? And that is because you get your going in price, makes all the difference when it comes to making a return. So a lot of times investors, like to go in early on an under construction project, knowing fully well what the risks are. But, when they do a risk reward trade-off, they decide to go ahead and make the purchase. And I think this is one of those examples of what exactly happened over here. Obviously, like every investment that is to be made, you need to do your research and be aware of all the potential pitfalls that could come your way when you go for that alpha, basically, right? And here, obviously, while Supertech, has had some sort of pedigree, some sort of brand equity in the market, clearly the outcome is here for everybody to see right now. Really big loss for all the investors and buyers who went in early on the Supertech promise. And while Supertech, the court will enforce, interest payments on principal repayments to all these buyers. But there is more than just the monetary financial loss that these people have suffered. They've all had built dreams around, these homes over the past decade or so, and they've all been literally demolished, literally and figuratively, right? So, this is for everybody to see. Now, from a market perspective in Noida, I think it's not like Noida as a residential market was doing spectacularly well any which way for the past decade or more. There's been, a huge supply glut over there. And adding to that, Gurgaon from a proximity perspective is always the go-to choice when it comes to that part of the world when you want to kind of make a house purchase. So it's not like Noida, was doing really well and suddenly Supertech brought it all crashing down. But having said that, I think what this will definitely do is make potential buyers a lot more circumspect now when it comes to under construction homes vis-a-vis, already built homes, resale homes. Yes, the going in price will always be a little higher, but I think people will and should be a little more circumspect now when it comes to buying in under construction homes in Noida. And I think there could end up being a little bit of a downward pressure on under construction homes as well when it comes to pricing. So, any which way, we'll see how this pans out, but this looks like what the most logical outcome can be.
Sure. Let's get to the topic of this episode, the real estate market What is the size? I mean, how big is it?
So look, I mean, lucky for me, there is nobody to corroborate what number I'm going to throw at you right now.
Okay.
Right. But, when you put an estimate to whatever research that we've done internally, whatever we get to collect externally from other estimates that have been made, looks like about a $200 billion market. It's a sizable market, out of which half is estimated to just be homes. Right. So about $50 billion would be new construction homes, $50 billion would be resale homes. Then the large chunk of this is going to be home loans. India is a big home loan market, right? So let's say about another $50 to $60 billion would be home loans. And then the remaining would be a split between, commercial real estate, certain categories of commercial real estate like warehousing, logistics, which have post-COVID gotten a massive, massive boost. We're talking about data centers emerging and yeah, I mean, retail has taken quite a battering during COVID. Everything's moved online, everything's become digital. So that market is shrinking or has shrunk. But that looks like about a fair estimate for the size of the Indian real estate market.
Sure. Do prices just always keep on going up? Because there's this impression that a lot of people have. I certainly had it till some point of time. What is the deal out there?
There's a little story here, Anupam. I think this entire India growth story, demand for homes, the big massive story was being built, I think, weaved around it over the past decade and a half. And what they got right is there is demand, right? There is a huge pent-up demand for housing in India. But what they definitely got wrong is at what price point can this demand be activated? And they got this horrendously wrong. Either they got it wrong or it was just kind of, like I said, there was a story weaved around it. And a lot of housing that was built over the last 10 years was built around, really unrealistic prices being underwritten. Which eventually, you can't have transactions. It's just not sustainable at that level, right? So now when you have financiers underwriting really high values, there's a lot of pressure on those who construct those homes to not drop those values, right? Sometimes it's just not up to them. And then you work together as a market on the whole, right? I mean, you can't expect in one locality, one developer to drop prices by 10-15%. And, what do the other constructions do around it? So everything works as a group on the whole, right? So it was very difficult for prices to drop at all, right? So that kept happening. And unfortunately in India, I think things respond only to crises. So something like, the IL&FS crisis in 2018, COVID in 2020, those are the kind of events that suddenly, there's like a big shake-up, correction, cleanup, and then the cycle starts again. The unfortunate part over here, Anupam, is that, yes, this has happened now because of COVID. There was a nice, I would say, correction. I could, went as far as 15-20% in markets. It definitely activated demand. People started buying homes. People are still buying homes. Prices are rising. But what I still fear is I don't necessarily see evidence of us having learned from it as a market. So to me, it seems like, we're back on that cycle once again, where people are going to get unrealistically excited about demand being there in the market, prices continuing to increase, reach a point where it becomes unsustainable, and then, repeat.
You spoke about a 15-20% drop to is there any recorded instance, and probably any specific data that you could have would be great, of prices actually falling?
Unfortunately, I don't think I can. I mean, I don't have very specific examples, but by mere fact that, we, by virtue of us running a real estate focused data company, I mean, everything that we do uses data, right, as its core ingredient. So we very clearly saw, I mean, what we do basically is we collect registration data from the government databases, which actually have records of prices, right? So around December 2020, when anyway there was so much pressure, developers were, while on the face of it, clandestinely dropping prices. But once you register a transaction, everybody gets to see it's public information. But in December 2020, when the government of Maharashtra took a massive step and dropped stamp duty from 6% to 2%, it was a game changer. That month was the highest recorded number of home sales in Mumbai for 5 years.
Wow.
Right? And we do have data and probably could at some point, maybe offline share actual prices with you to corroborate my story. But here it was, direct evidence of what really happened, right? You're already getting a benefit of 5% from the government. And then, prices were anyway down 10-15% in Mumbai, giving a fantastic opportunity for the Mumbai home buyer to really go ahead and buy that home that they always dreamt of, which at one point felt like it would always just remain a dream,
Yeah. So I'm going to combine a few questions out here on affordability and great locations to stay in. So first off is, there's always this thing about home prices not being affordable. Do you think that there could come a time when property prices are no longer affordable at all? I feel like Mumbai is already out there. So that's the first question. And, somewhere related to that is, what's the best city to stay in India?
Okay. So I think your question about Mumbai and affordability in general is, I think I kind of did answer it in my previous question, is that, we look like, we always seem like as a market, we go through cycles of real estate cycles, and real estate is cyclical. It's not like it's something very special to us. But the problem is, whenever we have events, whenever we have crises like IL&FS, any financial crisis, global financial crisis, or something as crazy as COVID, right? The magnitude of the shakeup, right, is something that really finally gets to the market. Nothing else seems to get to the market otherwise in terms of, getting real, right? So like I said before, that I would say in, late 2020, early 21, when we still have the stamp duty benefit to which the government of Maharashtra activated in sort of in collusion with, property developers also facing the heat and, dropping prices 5, 10, 15%, I would say made properties affordable in Bombay at that point, right? So, and it was a discount relative to what the list price was. But if you ask me, I wouldn't necessarily say these were, distressed pricing or anything of that sort. I think they were very real prices. I think they were great prices for transactions to happen. There is evidence in the transactions happening. Mumbai was selling homes in thousands every month. And it speaks for itself that, yes, at that point in time, I would say Mumbai was affordable, right? In the last, I would say, quarter, we have, including Mumbai, we've recorded a price rise of about 5%. Now, if this kind of, and this is nice, it's positive news, right? It
Correct.
Sounds good.
Yeah.
But if this continues for long, we're going to reach that point of unaffordability sooner than later, right? And then we just unfortunately have to wait for something extremely dramatic or drastic for things to get real once again, right? So, that's just the way our cycle, and I don't know, at some point, hopefully we learn. Otherwise, this is how it is.
Best city?
Yeah, this is now, once again, this is beauty lies in the eye of the beholder, right? You have this global livability index that comes about annually, and obviously more. I think they do a research about 173, 175 cities, something like that, around the world. Indian cities never ever feature in the top quartile. From what I read recently, though, and I was very, very surprised, is of all the Indian cities, Delhi came out on top in this particular list.
Oh.
What was even more surprising was Bangalore came last.
Okay.
Mumbai was somewhere in the middle. Okay. To some extent, I get Delhi. I mean, good roads, better roads. And when I say Delhi, I don't mean NCR. I only mean Delhi, right? But unfortunately, the pollution levels over there sort of wipe everything out that works for Delhi, right? So if you ask me on a personal level, like I said, it's completely down. It's a personal choice. I'm born and brought up in Bombay, heavily Bombay biased. Having said that, I've had fair exposure to Bangalore simply because of business. I like what I see in Bangalore. Yes, it has its cons. There's too much traffic, especially since the IT industry really, took off in Bangalore over the last 2 or 3 decades. You have people from all over the country converging on Bangalore, putting a lot of pressure on its infrastructure, so on and so forth. But I still feel generally, bang for buck, quality of life, Bangalore is a fantastic city to live in.
Sure.
So I would say that's my pick at this point in time.
Okay.
But these are dynamic things. I'll, maybe next year when you talk to me, I could have another answer.
Yeah. So let's get into the sector as such. Stuff like the current state. You can talk about residential and commercial separately. Any trends that you're seeing and investments, etc., etc. Let's talk about that. Where we are today.
Sure. Look, I'll have to take this asset class by asset class, but let's talk about homes to begin with, right? Most Indians invest, or I would say, buy a home, right? Now, largely, it's got nothing to do with investment. As a culture, Indians, it's written in the moment we are born, right? It's written in our destiny that, like roti, kapda, makan, or I would say Zomato, Zara and Zapki, right? We have to, there has to be a checkbox against all of these things. So, you have to, if you're an Indian, you have to buy a home. That's what happens. Yes, there are investors, but overwhelmingly, the Indian buys a home to live in, right? Now, obviously once that happens, your fundamentals are very, very different, right? When you're buying a home, there's more passion, there's more love, there's a big emotional angle. You don't get too heavily into pricing and things that affect an investment, what kind of yields, because any which way in India, residential yields are 1 to 2%, which do not make any sense at all, right? When an investor invests in a home in India, it's more about capital value appreciation, which they will realize a few years down the line. And really renting a home and hoping for a yield is doesn't make any sense. But that is generally how residential works in India. From a commercial perspective, yes, commercial yields a lot better in India. We do about 8 to 10% depending on which asset class, which market, etc., all those nuances being accounted for. Unfortunately, for the longest time, commercial real estate was always the bastion of slightly higher net worth individuals, because generally the ticket size is a lot larger than what you would spend on a home. Right. So it limited the number of people who could personally afford to invest in commercial property. But fortunately, things have evolved very, very rapidly in India of late, and it'll just keep getting quicker and quicker. And now there are platforms like fractional ownership platforms, for example, that allow for smaller bite sizes, for to include more people into the commercial real estate investing space, right? So that's an interesting avenue to look at, and probably a comparable place to park money with the underlying asset being commercial real estate is REITs. Right now, once again, you compare India with, say, the US. Right, the US had its first REIT in 1961. India had its first REIT in 2019. Okay, so we have a long way to go from a REIT perspective. And for that to happen, obviously, there has to be a massive evolution in the actual commercial real estate, which is the underlying asset class. That has to evolve substantially to give an opportunity for more REITs to happen in India as well. Today, we have only 3 REITs. America is 1,100 REITs, right? Yes, once again, sort of the maturity of the economy is a lot different over there. But, what is heartening is to see that we have so much more potential going forward, right? And from a commercial perspective now, COVID, for example, has, for all the destruction it left behind, it also changed the way the world lives, right? A lot of what we do now has sort of adjusted itself for us, allow for us to spend more time at home with our families. So on, it has give us ourselves more time, less time in the office, lesser time, in busy streets and traffic and things of that sort. So, online shopping, for example, I just give an example of retail, right? Of shopping malls and shops suffering heavily because of COVID. And that is because they were eaten into. All of that migrated to digital. That's right. Now, to sustain digital, you need warehouses to stock for Amazon and everybody to stock goods, for example, at the back end. Similarly, you're going to need a lot of data, a lot of bandwidth. So data centers is now emerging as a big opportunity for investors to invest in. So COVID itself actually created new asset classes for us to look at from an investment perspective.
Yeah. So you work in the real estate sector with Zapkey. What do you think are some of the biggest challenges? The biggest challenges plaguing the sector, and how do you think they can or will be overcome eventually?
So I think events, crisis, they are all fleeting. And don't get me wrong, when COVID came upon us, everyone thought, this was D-Day, doomsday, right? Everybody thought this was the end, and, it's just a matter of months, days, we don't know. At least I felt so, right? Now, looking back, I have the benefit of hindsight. I can see that I could still call it an event, right? And events are fleeting. They come, they do what they have to, and then they go, right? And that can be dealt with a lot easier. What really plagues us is, once again, it's very, very deep-rooted. Right? And I think the biggest problem in Indian real estate is the problem of trust, transparency, and the general overall experience, right? Generally speaking, if you talk about a real estate developer, the first reaction is one of, you're on guard, your muscles tense up saying, property developer. Or if I say the same thing, a broker. Broker itself sounds like such a like an abusive, dalal bolte hai, right? Which dalal doesn't sound like a compliment to anybody. At all, right? Yeah. That, I think, is the biggest problem over here, is how do we change the perception? It is one of the biggest employers in India as an industry. It is one of the biggest investments an Indian would make. Having said all of that, it is also one of the most looked down upon sectors in India. And I think that needs to change at its core. That why can't property and real estate become a delightful experience? Why can't it inspire trust, right? And those are one of the things when we build Zapkey, that is exactly what we're talking about here is let's make data accessible. Let's build comfort. Right? When you build comfort in the economy, the industry itself starts blossoming. Right? People want to participate more in an industry. So I think, honestly speaking, from a challenge perspective, I can't give you a list ke, ye hai, wo hai, policy hai, ye hai. Those are all things. Those are all honestly very, very solvable. Very solvable. Things like trust and transparency and experience and perception are so deep-rooted that they will take some time. But honestly, that needs to be worked upon more than anything and everything else for us to, fix very, very obvious problems in the sector.
Sure. Let's talk about some trends, Shubhankar. Anything that you're seeing? I mean, you already spoke about data centers and warehouses in the commercial, anything in the resident. I mean, let's talk about trends within each home and commercial. Anything you're seeing in home and anything you're seeing in commercial.
Yeah, look, Anupam, in homes, for a I wouldn't say long time because Gen Z is not that old a concept, but in the recent past, you saw sort of shoots of what the Indian Gen Z wanted from a home, right? They were breaking away from the tradition of buying a home. What you heard were murmurs of saying, we will never buy a home. We will always rent, right? And there was more to it than just making an announcement, right? I think the Gen Z is more of a breakaway, non-conformist sort of group, not necessarily believing in having a family as such. A lot of them probably don't want children, and then it gives them a lot of flexibility, right? They want flexibility in life. They want to explore the world. They want all these things, which they don't want things in their life that gives them the illusion of tying them down. One of them is a home. When you buy a home, you are tethering yourself to a certain location. So that was happening, but once again came COVID, right? And that changed everything, right? Suddenly everybody went back home. Whoever didn't have homes went back to their parents' homes. And they sat there and thought, I can't live in my parents' homes forever. That means I have to start planning my own space because landlord ne to bhaga diya. COVID has come saying, I don't want strangers in my house, right? So that really got people thinking. People who bought into the concept of having a home wanted bigger spaces. They wanted to account for the outside, inside. So, I want a bigger office. I want bigger area for my kids. And yes, so, those are the general, very, very obvious trends from a housing perspective that happened. Okay. Speaking about offices, I remember something in the early days of the IT industry in India, towards late 90s, early 2000s, a concept of hub and spoke came about in India, saying, why do we spend on, now, all the IT jobs are coming to India, and you're talking about thousands and lakhs of employees in every company, right? Infosys and Accenture and everything. And quickly people realize, we don't need to spend on a front office of 150,000 people in a fancy front office location. Wahan pe to we just need to keep management who will do, business as such. But all the processing work can go to cheaper locations, on the outskirts of the city, or maybe even completely to another city, right? Bombay, say you can go to Pune, there's proximity, maybe, and that's how Bangalore emerged as a IT hub, right? Cut to 2020. And what we observed was now it's become hub, spoke and flex. The back office that you had, now that is also being split down into flex space where, you don't have to come. The back office need not come to the office every single day because most of the processing work does not necessarily require human interaction, meetings, contact at all on a continuous basis. It's a lot of sitting at your desk and typing away, pushing away, right? So that definitely emerged with COVID. But what that also did was the remaining space office occupiers realized is too much of a capex, too much of an opex. You just never know when you need to downsize, what will happen next. And that gave a real push to the co-working space, like your WeWorks, for example, right? So from pre-COVID, where they were running at 40 to 60% occupancy, today you go to, and they are bursting at their seams. They are at 90 or 100% occupancy. Huge paradigm shift in terms of office occupancy, at least in India, right? And like I've said before, the other trends, obviously everything, went digital, right? So then you need digital infra, which is data centers and warehouses to stock your goods. So a lot, I must say, has changed in the last 2 years than probably did in the past 10 or 15 years.
Yeah. So what has been happening on the deals front for residential and commercial? Anything action out there that kind of shows that the sector is hot?
Yeah, I mean, look, at least in my lifetime, I have never seen such a heavy concentration of luxury transactions, or I would say high ticket transactions, happening so close to each other in such a short span of time, right? And I think once again, around December 2020, at least around that period when the government stepped in, not only in Maharashtra but other states as well, to kind of spur the economy, because there were no home sales happening because of COVID. It kind of intersected with also a capital market boom around end 2020 to say early 2022. You definitely witnessed a capital market boom. You also saw never unheard of funding activity in the startup space. They were record levels of funding happening. So startup founders were getting wealthy very, very quickly. And once such things happen, when you make money in the markets or when you make money as a startup founder, for example, I think, where do you spend your money? Like I said, real estate is the highest ticket item anyone would buy in their entire lives. So that's where the money started going in. So there's something called Billionaire Street in Bangalore now, which has all the startup founders becoming each other's neighbors over there. That happened over the past 6-9 months, say 1 year. You had Akash Education sell to Byju's for $1 billion. So I think recently Akash Chaudhary bought himself a, bungalow in Chanakyapuri, I think about 130, 140 crore transaction. Talking about something more traditional, I think the Rahejas recently in Bombay bought another bungalow in the Juhu area for about 250 crores. So, I'm seeing a lot of movement, definitely the higher end of the transaction spectrum over the past couple of years.
Sure. Let's go. I mean, we're moving towards the last end of this episode, and let's talk about investments, right? Now, if someone comes to you asking, how do I invest in this sector? So there's residential and there's commercial. What would you tell them? The differences between the two, what should they expect and how it works?
Yeah, look, I mean, there is, you can never ever tell somebody, yeah, just go and invest in, commercial. Yeah, probably all our uncles and mamas chachas would tell us something like, yeah, mat karo, wahan karo.
Okay.
But to be honest, I think what I can guide people on is characteristics of the two investments. So let's talk about residential really quickly, right? You need to understand residential. It's not necessarily a high yield asset, right? You buy a home, you even invest early, for example. But then when you get a tenant, right, you're not going to get more than 1.5%, at best 2% annually on that. Now compare that with commercial, right? Commercial yields about 7.5 to 10% depending. So there's always immediately a stark difference over there. That's point number one. So where does that leave residential? Residential makes its money only if you're looking at it as an investment on capital appreciation, right? But that capital appreciation also comes with a pinch of salt saying, will you get in early on a project, for example? Because once a project is fully mature, fully ready, fully completed, maybe it's already done one sales cycle, it is at a price point where your opportunity for an alpha is not so high as it is when you're taking a bit of risk. Like I said, super tech, for example, Exhibit A is you get in early, take that construction risk, and then honestly speaking, hope for the best. Because you can't predict these things, right? I mean, nobody predicted that super tech would be demolished, for example. Whereas in commercial, you're buying ready assets. You're buying already constructed offices, right? Sometimes you buy them empty and then get a tenant, or you buy them pre-tenanted, right? But they, from a capital value perspective, they are at a point where hoping for capital appreciation would be slightly unrealistic. It's not that much. Yes, it'll contribute to the overall return that you'll make eventually, but it's not the largest component over there, right? I think finally, I would say another difference is that, residential is, it's kind of tied into the previous point only.
Yep.
A residential investment is not necessarily a buy and hold investment, much like an office, right? Because or any sort of commercial income yielding investment. Those commercial investments can be held for a while, right? You can, tie in a tenant, a good quality tenant for a long time, for a period of even 9 years with a few escalations built in and sort of sit back, right? From a residential perspective, it always feels like a time, ticking time bomb. I wouldn't say time bomb, but the clock starts ticking the moment you buy it, saying, "Acha, when am I ready to sell?" And why you sort of think about, say, a horizon of 1 year, 2 years, 3 years. When it's 1, 2, 3 years, you're looking and saying, "Yeah, why is it not selling right now?" Right? You put yourself under a bit of pressure. So yes, residential does not sound, the way I described it, as ideal. people have made a lot of money on residential investments,
Sure.
right? So the point is, you pick your investment, you pick your asset right, you will make money.
Yeah. Two questions on this, Shubhankar. One short term and one long term, and look at the outlook. Short term, home loan rates, okay, or interest rates per se. Why home loan? I mean, the interest rates affect the sector quite a bit. And the long term where India is supposedly, this very great place to. Economic growth is looking good, fastest growing in the world. I think you gave a number of $200 billion for the size of the real estate market. There are some estimates that say that it's going to go to 1 trillion next 5, 10, 20 years, God knows what. So outlook near term, interest rates, outlook long term, whatever, what are the factors there?
Look, I think we just recently had a pretty quick consecutive back-to-back interest rate hike very recently, right? Hopefully that has arrested some part of the inflation that it was done for. And I hope it does not, we don't see another one anytime soon, is because largely that affected the affordable housing sector, right? Affordable housing sector is the most sensitive to the interest rate hike. They rely heavily on home loans. And that definitely we saw reflecting in the numbers as well, that, affordable housing sales dropped by 7%. It will continue for a while. The drop will continue for a while until there is certain level of boost given to the subsector, right? From a higher ticket perspective, against mid-income, yes, there was an effect, but mid-income sort of potential home buyers also have, they are from a slightly higher strata when it comes to from an income perspective. Mm-hmm. So they can sort of absorb the shock a little better than affordable housing. Affordable housing also, most often than not, will be a first-time home buyer. So it's a question between having a home or not and that's not necessarily always the case at the higher end. And of course, like I said, luxury from that perspective, yes, it does affect them. It's not like they don't take a home loan, but the own contribution is so high that it does not affect them as much as it does at the lower end of the spectrum. Speaking about, the real estate sector on the whole, look, it's difficult, right? It's like I said, $200 billion is my number. You ask somebody else, they could be 190 or 250. I don't know what that is. Thereabout, we are in the ballpark. Sure. Whether or not India will hit a 1 trillion size, I think we're on the path, right? Mm-hmm. Question is when? I don't know. Hopefully sooner than later. So the question is, yes, should we invest in real estate? If we know for certain that we are heading at least in the right direction, should we invest? My answer is a resounding yes. But at the same time, where? Yeah. When? Yeah. What? The investor in real estate, there's no... the last thing you want to do, which we've done as a culture, as a market for all these years, is go by hearsay, right? Sab log udhar dal rahe hain, aap bhi dalo, right? That attitude needs to change, right? Everybody has to be responsible for their own investments, because you cannot go back and cry saying this guy made me do it. And that doesn't absolve you of anything. Your money is not coming back after that, right? Yeah. So sure, just because, we are heading in the right direction, it doesn't mean en masse every investment in real estate across asset classes, across developers, across any stage of the life cycle of an asset is going to be a safe investment, or is going to give you the alpha that everybody else gets. You have to be smart, you have to be mature about your decision making, consume as much data as possible, and make the right decision.
Let's talk about that, because that's absolutely my next question. Everybody says this location, as the very, very old saying goes.
Yeah.
Guide us through this. Is location the only thing? You said if everybody's putting there, you should, at least think. So how should one approach this? There is location. There's a lot of other factors. How should you go about doing this?
So my answer is slightly controversial. My answer is going to be yes, right? It is about location. Now, let's just quickly understand what I mean by that. Now, we all know there are fancy locations in, say, Bombay. Like there's Bandra and there's Juhu, or there is Johor Bagh in Delhi, right? If you ask somebody how are these locations, they're amazing.
Correct.
If you invest in them, will you get an upside? Answer, no. Why will you get that? These are they're completely mature locations. What is the potential for upside here? What is the reason why that prices will increase over here? These are already fairly well occupied. There is nothing new coming up from an infrastructure perspective. So I don't see a reason for you to invest here and hope for a return, right? So what does location actually mean? A location actually means that it has a solid foundation. It has the fundamentals to bring you a oversized, well-sized return if you invest today in the near future, in the near to mid-term, right? And once again, like my previous answer is, you need to know, you need to do your homework, and you need to understand why this location will do what you expect it to do, right? For example, a new IT hub. Does it have, okay, now, it has couple of new offices. Will 2 new offices really create a mini city around in that location? I don't think so. It has to have the right fundamentals to become a self-sustaining commercial hub. Yeah. It has to have the right infrastructure. It has to have the right access. It has to have, even subtle things. For example, is it far enough from an existing residential market to have its own residential market, or will it be people preferring to travel from established markets? Yeah. These are all things that you need to take into account when you think about a particular location. Then there are other things like competition, right? There's a new IT hub here, but 2 years down the line, there could be something else that could seriously compete with it and take away everything that it had planned for itself. And that makes your investment absolute dust, right? So, like I said, it is all about location, absolutely, 100%. But you need to know everything about that location and not once again go by hearsay.
Anything else here? I mean, like quality of builder or whatever it is. If it's commercial, that again goes down to location. But anything other than location?
Yes, absolutely. I mean, I think one very important point that you made, we started this conversation with Supertech. We could pretty much end it with something similar as well. Absolutely, quality of builder is very important. I mean, we've all seen viral videos of a, so-called tier 1 builder in Bombay.
That's ugly stuff.
Yeah, when you punch a hole and stuff into the wall, you always went with the brand. You always went with, this is a great brand, you can't go wrong with it. And then suddenly one day, it's gone wrong and you can't take it back. So, quality of builders is very, very important. And, and there is a reason why a certain set of builders have been around in the market building quality homes, quality offices for decades, right, altogether. And then there were smaller ones who came, who thought they could, fly by night. COVID came, set it all right? So definitely quality of builder is...
One more common thing that comes up a lot, at least on the residential side, what's called UC versus RTMI, under construction versus ready to move in. I didn't even know this RTMI means what it means, but any thoughts there?
Yes. I mean, look, with under construction, why do people invest in, just understand why people invest in under construction. One is, as an investor, you're looking to get in on the cheap, right? That the moment the building is ready to be sold, it's the difference between wholesale and retail, right? Simply put.
Correct.
But then you're running the risk of construction delays or maybe some other issues that could, halt the construction or simply wipe it out completely, for example.
Matter of trust.
Absolutely. Right. When it comes to, there's another very interesting thing, this is GST. Right?
It's become a big component now.
Right? So you have to pay GST now as a buyer in an under construction project. Compare that to a ready project. There is no construction risk, right? It's ready, right? You just buy and you RTMI.
Correct.
Right? And there is no GST. Downside is ready projects are not governed by RERA, for example, right? Your resale, I wouldn't say ready projects also, your resale, right, is not governed by RERA. So if you're not buying directly from the property developer, you do not get any relief under RERA if there's any issue, for example.
So if I buy from you what's called a second sale, then that's not
correct. Because I mean, as a seller, I'm not the guy who's built the home, for example. So I can't be held necessarily accountable for the quality of the product I'm selling you, right? At least you have an under construction, and even if it's ready to move in or whatever, you fall under the RERA ambit, for example. So once again, it is. But again, in resale, if you want to de-risk yourself so much, there's a price to pay over there, right? You pay retail price. Right. So it's completely down to, but I've definitely seen a trend of, over the past 2 or 3 years of people preferring to buy ready assets than really what I'd call go through the headache of an under construction project.
Trust and transparency, as you had said.
100%.
Okay. We spoke about this in passing in your previous replies. Fractional real estate. Both products are now available for retail. I wouldn't say retail, but for investors. Let's just say for investors. Any thoughts on both REITs and fractional?
Yeah. So look, I mean, once again, there is this little bit of a parallel, I would say, between under construction and ready to move in homes. And don't completely hold me to that, but I'll tell you how I'm thinking about this. Right now, REITs are regulated by SEBI, and they are professionally managed. their promoters are large entities. Sometimes it is a combination of a large pedigreed property developer who's got an investment from a sort of a large fund, for example.
Mm-hmm.
So everything is at a very, very large scale, very kosher, etc., etc. But because you have all these cushions and safety nets and fantastic management, and there's a cost attached to it. So your net yield that you make as an investor in a REIT will be most often lesser than what you will get investing in a sort of fractional ownership of an asset, because as the word suggests, fractional ownership is literally direct ownership of the asset, right? Whereas in a REIT, you actually don't directly own the asset.
It's indirect.
Correct. You basically owner of issues or shares of a company that owns the asset, right? Here, since you own directly, your benefits are a lot more direct. So your yields that you make are higher, risks are higher, management is yours, right? So you have to, like I said, if you want to reap the rewards, you have to go through a little bit of getting your hands dirty, going through a little bit of a risk. Even another very important point I would bring up as a difference between the two is the secondary market or liquidity of the shares that you own in a REIT vis-a-vis fractional ownership, fractionally owned asset. There is an established secondary market for REITs. There not necessarily is a mature established one for fractional ownership yet.
Yeah. So let me ask this in a different way, because obviously the same investment, REIT and fractional real estate, there are some very fundamental differences. Like fractional is still not regulated. REIT is. REIT is via a broker. The ticket size, you could buy maybe even 10,000. Because now SEBI's brought down the limit from what I hear.
Correct.
Fractional slightly higher. Do you think that they're both for different types of investors?
I think so.
Sure.
I think so. I definitely think so. The fundamental difference between the two is that a REIT investor does not necessarily have to be too savvy or well versed with the asset class. Whereas the investor who invests in fractional ownership knows more about the industry, the space, and then says, look, I know a little more about this. I'm going to manage this a little more by myself. And, why should management take the little extra? I'll keep it for myself.
Okay, now my favorite question, burning question, hot question, really, ekdam sansani case from a certain point of view. Shubhankar, which I'm sure a lot of listeners have in their mind, buy or rent. We've already spoken about this whole rent and deal thing and all that, but what are your thoughts? What would you tell someone who comes to you saying buy or rent? And this for home, by the way, sorry.
Yeah. I would first, want to know a bit more about the person who's asking me, because like I've said before, there is no right or wrong answer here. The answer is, how is this for you, right? Because that answer differs for everybody. Now, if, for example, let me just take hypothetically, I have kids, but say we didn't want to have kids, right? And we wanted to sort of have the flexibility, travel the world, don't want to be tethered. Maybe we had even some sort of jobs that didn't entail or require us to go to the office. So then why should I buy a home and keep me tied down to a particular location when I have literally physically nothing to do with that location apart from live there, right? Whereas now say you have a family who have kids going to a school, right? You have an office, you need to go to that every day. You cannot be moving homes where your day jobs and your day activities are fixed. Right, the home is the fundamental place where you need to come home every evening. So it seems to me that this question is mostly asked from a financial perspective. I generally cannot answer it from a financial perspective because I don't think it's a financial decision, right? It completely boils down to, just take for example, you're here, you have a family, you have a couple of kids, and every 11 months or whatever is your lease period that you sign up, 2 years, 3 years, you have to go through the hassle of moving. As the family matures, it becomes more and more difficult to do, right? So I think, it completely depends on what your lifestyle is, what your life choices are. But honestly, to me at least, it's not a financial decision.
Yeah. And God save you if you have a bad landlord. Middle of nowhere, he just says that you have to vacate.
I swear to God, this happened to my friend just a month back. One month back. Saying my mother is coming back from the US.
It's usually that. Son is coming from US, mother is coming from US. Chalo, boria
this is your 1 month notice. Please vacate. What do you do?
That is a tough one, honestly. At least with your own home, that's literally never going to happen. Okay, Shubhankar, any parting words for retail investors thinking of investing in the real estate through the stock markets?
Yes, look, I mean, couple of things. If you don't want to go through the trouble or, of doing all the homework, because, I've been harping on this for the last half an hour or so, saying if you're going to invest in anything in real estate and directly in the asset, you jolly well have done your homework. You are responsible for your own decisions. But if you want to sit back a little bit, right, then there are real estate companies that that are on the stock exchange. They've been around. I mean, I probably don't know if I should name any, but they've been around for a decade. There are a bunch of them that have such good pedigree. They've been around for anywhere between 50 to 80 years, right?
In existence. Probably longer for some of them.
Correct. They are up 150 to 200% over the last 5 years, right? A couple of them have outperformed the market. They clearly know what they're doing, right? Clearly good management. To sustain this kind of growth, this kind of stability over a 5-10-year period speaks volumes, right? So one way to make an investment, have a little bit of diversification and exposure to the asset class is, invest by buying stocks of these companies.
Sure.
That's it.
So that looks like there's a wide choice for investors, right? I mean, you've got REITs, which are also listed, by the way. So if you're buying stocks of a real estate builder, that is also in the market. You've got REITs, you've got fractional real estate. But so just 2-3 final points for anyone thinking of a retail investor thinking of investing in the market. One was, of course, location, sector outlook. Anything else you want to just leave our listeners with?
Sure. Look, 1 point, once again, risk of repeating. Do your homework. It's very important. It's your hard-earned money, right? Don't let it be somebody else's decision. If it works out, everybody's happy days. If it doesn't, you really can't blame anybody. So that's point number one.
Sure. Point
number two is generally, investors like to invest directly in an asset, whether it's residential, whether it's commercial. When you do that, there is a little bit of heavy lifting to be done in terms of managing the assets. A lot of people don't like to do that. But when you do that, you have potential to save on management fees. You make a little more on your return. And third point is, of course, if you're willing to sacrifice that little cushion or little upside and pay a management fee, then there are listed stocks for you to look at, like REITs, or even listed pedigreed, very, very pedigreed real estate companies who've been around for multiple decades. Generally speaking, they will have ups and downs, but seems like you can't go wrong with them.
Sure. If you want to know more about the real estate sector, do check out the Realty Tracker Smallcase, which is a portfolio of stocks that will benefit from growth in real estate that you can track and invest in with your favorite brokerage account. Links, as always, in the episode description. And with that, folks, that's a wrap on this episode and this season of the Ideas Project. Hope you enjoyed this fabulous chat with Shubhankar and hope this helps you understand the real estate sector a little bit more. Shubhankar, thank you so much for doing this for our listeners.
Thanks for having me, Anupam. My pleasure.
Great. And folks, if you like this episode, do consider subscribing to the podcast and leaving us a review on Apple Podcasts and Google Podcasts. This podcast is powered by Smallcase. Until then, bye-bye. See you.
Hello. It's been another great week on the IVM Podcast Network. On episode 50 of the Life Manifesto, Zarina tells us a story about Gautam Buddha that teaches us to control our anger. On Cock and Bull this week, Cyrus, Karthik, Antriksh and myself talk about the Noida Twin Tower demolitions, a recent Swiggy controversy, and the Asia Cup fixture between India and Pakistan. On a niche thing, Anish talks to Naveen Mittal and Pankil Shah about the cult of craft beer and the various beer choices in India today. On the Musafir Stories, traveler and entrepreneur Abhishek Vaid of the Untraveled Show takes the listeners on a trip to Ladakh. He tells us about some of the lesser-known places and delicious cuisines one should definitely check out. On Smarter with Sid, Siddharth talks about the best way one can build a presence on social media and how creators can develop a viewer base for regular engagement. Once again, I'd like to remind you all about our merch store. Go check it out on the website, ivmpodcast.com. There's a tab for a shop. Click that and it'll take you to our store. Also, do follow us on social media. We're IVM Podcast on Twitter, Facebook, Instagram, and LinkedIn. Please do spread the word about the show. That really, really does help us. And finally, do remember, rate us or review us wherever you are listening. And that could also be YouTube. We have a number of channels on YouTube where you can go and check out our shows. you can go and find those channels on ivmpodcast.com/YouTube. And finally, we'd like to thank our sponsors this week: HDFC Mutual Fund, TransUnion Civil, SBI Life Insurance, Checkpoint Software, and Smallcase. Thank you so much for making this possible.
Ladies, do you still think managing your finances is a difficult task? Then your answer will surely change after you listen to our podcast, A Sip of Finance, a show where our financial advisor Priyanka Acharya's quick and handy tips will make saving easy and help you multiply your money. The podcast is available in English, Hindi, Gujarati, and Kannada. So tune in every Tuesday to listen to A Sip of Finance on the IVM Podcast website, app, and all the other audio platforms.